What's good, guys? Welcome back to day, I believe, 13. I missed the last day before, just had some stuff, don't want to make any excuses, but should have posted earlier, but I'm sorry about that. We're going to continue on and continue with day 13, and then I'm going to also post day 14 as well. So I was going to write out a doc like I usually do, but there really wasn't much I could think of to write on the doc, which would make sense to just like talk about, so I just decided to explain it to you guys in the chart itself. So yeah, today we're going to be going over how to identify or how to find precision entries. And this video is mainly going to cover, a little bit of my strategy, but I'm not going to fully go in depth with it. I'm just going to show you main ways to actually get certain entries and how precise you can be with certain entries. So yeah, I'm going to give you some examples on the chart from today, and you can kind of use that and go figure it out yourself, back test whatever you need to back test. But I'm going to have a separate video on my strategy as well. But of course, just going to go over just a little bit about overall precise entries. So first of all, you guys need to understand that these precise entries obviously happen on the 1 minute, right? They can happen, on the 30, the 15 second, or 30 second, 15 second, 10 second, 5 second. But usually I avoid the 30 second just because I've noticed in my data from recently and from before and just all these different times, I've lost the most on the 30-second chart, and most of my wins have been on the 1 minute all the way to the 5 minute. That's the highest I'll enter on, is the 5 minute, and that's still a little bit high for me. But in terms of precision entries, a lot of the times where you're going to get these precision entries are just at very strong key levels, and in that case, most of the time it's going to be areas like previous day equilibrium, previous day low, previous day high. Session liquidities like Asia highs, Asia lows, New York PM lows, New York PM highs, lunch high, lunch low, New York high, London high, whatever. All those areas right there are areas where price can reverse very quickly. We could have a tight stop and just overall have a very good entry, meaning that, it's very precise to the point where you won't have any drawdown or very, very minimal. So we could even go over here to this chart because I did mark out some examples from earlier just to show one of my students. But if you look here, right, this was the trade basically right after the morning. There were all these ones, but I mean, all these aren't super A plus, but they're good enough to take. I just wanted to wait for the highest probability one, which was this one down here from today. But if you look, most of these setups that have no or zero to no drawdown are the ones that have inversion fair value gaps. If you look here, we actually inverse this gap, and there's also a 2 minute gap too that we inverse. But you can see that after we inverse it, it barely pulls back. It inverses through it and then pulls back into it once, very slightly, and then immediately goes to the drawdown liquidity right here. Same concept applies here, right? We inverse, barely any drawdown, goes straight down. Same concept here, pulls back up, barely any drawdown, goes down. So a lot of the times people will get into a trade and they might get in just a little bit too early. And thankfully, they might have their stop placed at the right position. So let's say, they might get in long, like right about like here, right? And they have their stop, let's say, below the midpoint of this new week opening gap. So I'll give you an example. Like, let's say they get in long here and then they have their stop there, targeting that, right? Obviously this is a shit trade, but some people who are, less experienced, don't have the necessary knowledge to get these precision entries. Sometimes they'll, endure a bit of drawdown for a while before the trade starts to go in their direction, right? So ways you can actually figure this out and get these precision entries is by back testing over and over again and just seeing it happen live in the charts. So if you want to actually have a way of doing it the correct way, really all I wait for, S&T static inside of a key level, wait for an inversion. Most of the time, if the draw is higher, we have enough momentum, it's going to straight up just go to the draw liquidity with barely any hesitation, no drawdown, nothing like that. And as you can see here, that's exactly what these ones did right here. So this was sort of a trendy kind of day, a little bit, not really. We opened here and we pump up, pump back down, pump up, and then we kind of just sell off for the rest of the day. And then slight pump up, accumulation, dump off again, accumulation, pump up, and now we're accumulating. So it's mainly just about waiting for the right time. And notice as well, this long isn't really like a prominent time. I guess you can kind of think of it as a prominent time because we have the 8:30 or the 9:30 open right here. So that 30-minute candle was the open low and then the high close, whatever, right? But the candle closed down here. So you're catching the first, the first 15-20 minutes of that opening candle on that 30-minute. And then the same concept applies here, right? We have the 10 a.m. open right here. So this is where it opens. You're catching you're waiting for the wick of the 10 a.m. to happen, and then you're catching the rest of the candle. Same thing here, right? We have 10:45. This could be a 15-minute candle, right? You don't always have to look at time and be like, okay, where is it going to be? 10:30? Is it going to be 10:45? Is it going to be no? It doesn't matter. If for an example, let's say there's something like this, right? Let's say you have an accumulation range at around 9:30 to like 9:55, okay? And then out of nowhere, you see a manipulation higher. Like let's say 10 a.m. opens right here. So 10 a.m. will open, and then we'll print a high, which on an hourly time frame will be a wick, and then from there it'll continue on with the trade and go to the drawn liquidity. So that's like an example of when you can use time almost precisely to actually frame an entry. But as you can see here for this example, the opening price of the 10 a.m. was right here. We print the wick, right, 10:17, and then we start to dump off, and then the finish of that hourly candle is right here. So it really depends on where price is, how discretional you are with it. But for the most part, I literally just look for an SMT inside of a key level, wait for displacement with an inversion in the direction of the drawn liquidity, and that's where you'll get most of these very precise entries. Now, sometimes people ask me, how do I know whether a fair value gap that gets inversed is going to just straight up inverse it and go to the draw, or if it's going to come up and tap it? Now, you can't really know for sure, obviously, because the market just does what it does. But from what I've experienced and from what I've seen backtesting and from the live markets, a lot of the time, if we have a leg up, like you see how we have a breaker pattern here, A, B, C, right, high, low, higher, high, lower, high. If we have a breaker pattern like this, most of the time, if we have a strong change in state of delivery below an opening price like this, you see here it wasn't too strong, but it did displace. Most of the time, if we do have a strong change in state of delivery, it will just come up and tap that change in state of delivery, leaving that inversion fair value gap open, right? So in this case, you can see we actually did come up and tap it right there, very precisely. And in that case, because we didn't close below this opening price with displacement. And I mean, you can see that in every single trade in here, right? You can see, okay, right, we have this inversion for value gap. We close above that opening price, and then we get really close to this leg here too. But of course, we open on the 2-minute, trade lower, and fail to take the inversion as well. Another thing as well, very important, take notes on this. If ES comes down and taps that gap, more than likely NQ will not come down and tap the gap. Because you could see this wick here at 9:36, we never came down and tapped that on NQ. We never came down and tapped the inversion, but we did on ES. And you can see the next one at 9:38 came down and actually took out that low on NQ, right? So we had the SMT there. So that's another way you can frame that. If you're watching this and you see ES tap it and immediately reject, just enter. At least if you can get a really good fill. If you get a fill up here, then it's not that good. Try to get the best fill as you possibly can. That's one trick that I've used, and one thing that I've seen happen over and over again. And another thing that you could do as well, you can look at different areas in price, like new week opening gaps, new day opening gaps, midnight open, like I said, all these areas, and you could see how we respect them in certain scenarios. So you have this new week opening gap here. You see we retest it here, trade up, retest it again, got the long trade there, right? We fill it completely here again, and then of course we trade up off of it, and then at this point we finally trade through it with displacement. You see that? And now as we trade back up, you could see the midpoint of it right here is respected. So at this point, in terms of having precision entries, pairing up this with this SMT up here, like we mentioned, right? This one right here, this SMT, it's inside of a 3-minute gap, I believe. So you have this 3-minute gap. Yeah, so we have this 3-minute gap, this open breakaway gap, and then you can see we actually did tap it on ES. So we have a fair value gap that's tapped into with an SMT. And then you might be wondering, well, where's the key level? Well, you have two key levels. You have this one, this 3-minute inversion for value gap, and then you also have that new week opening gap that we're respecting the midpoint of. So that's what you could use a lot of the time. And you imagine this was midnight open, same concept applies. It's acted as some sort of support. to send price lower. Vice versa, same for bullish, right? Wait for price to show bullishness, wait for price to react off certain PD arrays with an SMT, and then you could use those areas as support to trade you higher. I meant resistance for this to go down, but it doesn't really matter. There's support term resistance, resistance term support. I don't really give a shit about support resistance. I just put it in there as a tool that you could, kind of use. Oh, we're finding support here, or we're finding resistance here. It doesn't really matter. As long as you have PD arrays lining up with the drawn liquidity, you're gonna be fine. Okay, that's really it. You could use the inversions, you can use certain key levels, and then you could use those SMTs to tell you, okay, that high should not get taken if the drawn liquidity is lower, which will give you better RR, which will give you better RR trades, and will give you more precision in terms of where to know in terms of where to know where to put your stop loss. So, yeah, I'm trying to think if there's anything else I should mention for you guys while we're here. There really isn't much else. That's all I really use. It's just inversions. I use different key levels, and yeah, that's really all I got. If you guys have any questions, if there's anything that you're confused on, feel free to leave a comment down below. I will answer it as soon as I possibly can. I read all the chats. I'll probably make a video on it if it's something extensive that I can't really just type out to you or to whoever needs help with it. But yeah, I'll leave you boys with that. I'm going to get started on this next video because I got to get this out before tomorrow comes. But let me lock in real quick and leave a like on the video, subscribe if you haven't already, and I will catch you guys in the next video, and I will catch you guys tomorrow for Wednesday's trading for CPI. Peace.